This video is going to provide an introduction to the Average Directional Index indicator. Hello, I'm Peter Martin with Trading 212, taking a look at the ADX, which is an indicator invented by a man called J. Wells Wilder, who was a major innovator in the field of technical analysis. And in the late 1970s, he introduced a number of well-known indicators that are still used regularly to this day, including the average true range, the relative strength index, and the ADX, which is what we're looking at today. Now, the ADX was intended to provide a rating for pretty much any market as to what J. Wells Wilder called its directional movement. Now, we might just more simply describe that as being how much it is trending. Now, I'm not going to get into the calculations behind the indicator because they are quite involved and they're not all that important to know. What you really need to know is that the indicator plots three lines on a chart, the first of which is the ADX itself, the Average Directional Index. Now, this is a value that oscillates between 0 and 100. And the higher it is, the more the market is trending, and the lower it is, the less the market is trending. And really a key point is 25. Above 25 it is a trending market, below that is not considered to be a trending market. And then there are two other lines, and these are directional indicators. There is a positive directional indicator, the DI plus, and there is a negative directional indicator or minus directional indicator, the DI minus. And they do give you a gauge as to how much the market is moving up or down. And the interactions of these two lines with each other and with the ADX can provide you with some signals, as we'll see when we look at some charts. So let's go into Trading 212's platform now and look at actually using the indicator and what signals we can get from it. Here is a chart of silver. Now, we said that the ADX can be used to gauge the directional movement of pretty much any market, and that is true. But when J. Wells Wilder originally conceived of these indicators, he was primarily focused on commodities. So I thought it might be appropriate to begin with a commodity. So I'm starting with silver. The time frame that I'm using is a daily chart. Wells Wilder was originally looking at daily data. Now, the primary reason that he would have been doing that was because it was the late 70s, computing technology wasn't where it is today, and it would have been far more convenient for him to have worked with that kind of time frame when he was doing most of his calculations on a manual basis, or on a far more manual basis than we do today. Trading 212's platform will use any time frame and it will calculate the ADX in an instant. So you can work with pretty much any time frame you want. But I think because it was originally intended to work with daily data, that is what I'm going to use as my example. So let's get the ADX added on. Let's right click on the chart and choose indicators. And it is primarily thought of as being a trend following indicator. So it's under trend, and there it is at the top, the Average Directional Index. So let's click on that. And then our menu provides us with two default period settings. There is a 14-day period or 14 period setting for the ADX line itself, and then 14 default value for both the directional indicators, the DI plus and the DI minus. J. Wells Wilder recommended using 14, so that is what I'm going to go with. You can also customize the color of each line or the thickness. I'm quite happy with these values, so let's click confirm and add it onto our chart. So here it appears at the bottom of the chart. So let's talk about the blue ADX line first of all. So this is telling us about the strength of the trend, how strong the directional movement is. The higher that line, the stronger the trend. An upward slope is indicating an increasing trend. And we can see that back here when the market was moving sideways, I've got my tooltip on here. We can see the ADX value is around about, well, it's 10.76 at this point. So that's below that 25 point where we would consider it to be a trending market. Now, the most basic signal that this can give, if you're using it as your sole signal provider, is a cross of the directional indicators would give you a trading signal. So green crossing or red crossing above the green line, so that's the DI minus, but going into ascendancy is a bearish signal, and the green crossing above the red line, so this is DI plus crossing above DI minus, is a bullish signal. Now, because it is primarily a trend following tool, when we're using it in this way, we need to see the ADX above 25 to tell us it's a trending market in order to follow one of these signals. So at this part of the market where it's moving sideways, we can see the ADX is below 25, so we haven't got a trending market, and we're going to ignore our trading signals. So we get various crosses. When we get here, if we look here, we can see that we get a bearish signal, so we get the red going into the ascendancy. It sort of happens again here, it's not really, but they sort of touch. But we can see that the red line goes into increasing ascendancy after this bearish signal. But the ADX for all of this point is below 25, so we'll be following the market and seeing what's going on, and we can see that the ADX line is starting to move up, so the trend is starting to increase. We can see that the red DI minus is staying in the ascendancy, it's above the green line after that cross where it crossed above it, the bearish signal, and we get a switch from 24.25 on this day to 26.57 in the ADX. So that's the ADX crossing above that key 25 point on the 18th of July. So that's this candle here. Because it's a lagging indicator, we wouldn't be looking at this until the next day. So it would be on this day that we would then say, okay, the ADX is saying we're in a trend. We've had this bearish signal from the DI minus crossing above the green DI plus and staying above it. So let's now go short the market. So we might get into silver around about, let's say, 1540 there. And we can see that the ADX continues to strengthen. The trend is increasing, and we'd stay short the market. Your ultimate signal to get out would be a crossover again. If this red line went back below the green line, then that would be our signal to get out. Something else you might want to pay attention to is the slope of the trend though. So we've got the blue ADX line starting to descend here. It doesn't mean that the trend is over, but it does tell us that the trend has been weakening. And something else you can also pay attention to is that Wells Wilder said that when the blue line goes above both the directional indicators, when it turns down, that might provide an indication of a top or a bottom. So you might, at those points, consider taking maybe some partial profit. So we have a slight down here and a slight turn down here. There might be areas to consider. We'll see on some of the other charts where this is a bit clearer. Let's move on now to euro dollar just for another example. So once again, we've got the ADX is below our 25 points. So we're not in a trending market at this stage. And this is going back to early 2017. We can see that we get a bullish crossover here. The DI plus crosses above the red DI minus. So that's a buy signal, but we don't have the sufficiently trending market at that point. So we keep watching the market, and we can see that the green line stays in the ascendancy. So we've had a bullish cross and the green is staying in the ascendancy, and we followed the ADX to see, do we get a 25 where it's telling us that we're in a trending market? And yes, we do at this stage. So on the next candle, we'd buy in, and then we follow what goes on. And then we see that the trend continues to increase in strength. The green line stays above the red DI minus. Our ultimate exit signal would be here when we get the cross under of the green line under the red one. So that would be a point that we ultimately close out or even reverse our position if that's what we wanted to do. But we can also look at some other inflections in this ADX line, especially when it's above both of the directional indicators. So there's one here where we might think it's definitely above both of them, and we get a clear downturn in the trend. So it's weakening the trend here. This might pick a top, so that might have been an area to take partial profit. And we have another one here where we start to see the trend weaken, and that might have been another point of considering taking some partial profits. And then finally, just another one here with the US 30, the Dow Jones Industrial Average. We can see there's a long uptrend here, and we would have got a bullish signal with this cross here and waited for the ADX to get to a sufficiently strong value. So around about here, we'd have gone long. Now let's look at where we would have got out. So we would have had a cross here and got out, and then we have another bullish signal here and got back in. And then We have the ADX line above both of them going up and up and up. It's still increasing, the slope is up, and then we get a downturn here, and that would have been a pretty good pick of the top of the market. So that's just some examples of using the ADX to give you some trading signals. Now, we don't have to use it as our primary indicator. We can also use the ADX as a tool for complementing other indicators. So one way you could do that is to just simply look at the ADX line itself and ignore the directional indicators, and just use that as a way of helping you feel about the state of the market, about whether the market is trending or not. It gives you an actual number to rate it. So if you were using a trend following strategy of using some other indicators, you might only follow what they're saying if you see this being indicating a trending market of being above 25, or perhaps you'd be using a strategy where you're looking to trade a range bound market. You didn't want to be a trend follower, and then you'd be looking for this ADX line to be at low levels, to be below 20 or 25, and indicating that it's not a ranging market. You could also use the directional indicators as a filter. Let's say that you're using some other system that gives you buy or sell signals. You would only follow a buy signal if the green line was above the red line, and you would only follow a sell signal if the red line was below the green line. So that's just an example of using the ADX as a way of complementing some other trading methods. So that's a quick introduction to using the ADX indicator in Trading 212's platform. If you feel that this might be an indicator that's of interest to you, as always, it's best off to start using it in practice mode and see how things go there before progressing to using real money. Well, I hope you enjoyed this introduction to the ADX. If you did, please hit the thumbs up button and give us a like. Or if you've got any feedback or suggestions for topics for us to cover in future tutorials, why not send us a message in the comments section. We do read through every comment that comes in to us there. Now, as well as doing these tutorials or educational videos on trading, we also do analysis of popular markets such as Euro versus US dollar, gold, crude oil, and the Dow Jones. The best way to access all those videos is to subscribe to Trading 212's YouTube channel by clicking on the subscribe button. And we put out new videos on a regular basis. If you click on the alarm bell icon, then you'll get a notification the next time a new video is uploaded to YouTube, and you won't miss out. But that's all for this time from me, Peter Martin, and Trading 212. Thanks for watching. I'll see you next time. Goodbye.